Rates are likely to be a little better this week than they were on Friday, but not by much. Tomorrow is going to bring some producer inflation data. This isn't likely to make any big waves. All the attention this week is being taken up by Wednesday's consumer price index, which is the consumer inflation, and the general expectation is that that number is going to come in a little lower than anticipated. This would be a favorable sign for interest rates. Wednesday's also bringing retail sales data. The reaction to these two data points last month really moved the market, and there's no consensus on whether the data is going to be good for rates or bad for rates this go around. Last month's data created a pretty big surprise reaction, led to a shift in the expectation of what the Fed's plans were for the rest of the year, which led to a sharp uptick in interest rates. Mortgage rates stayed there until Fed Chair Powell calmed things down a couple of weeks ago with his press conference following the last Fed meeting. In that press conference, what Powell did that was important is he pretty much just dismissed concerns that the Fed could raise rates again rather than cut them this year. That really led to some stability in rates over the last couple of weeks. Keeping in mind, bad news is generally good news for interest rates. Along with that, the signs last week of a slowdown in job growth for the first time this year really seems to have reinforced the idea that there's a couple of cuts coming from the Fed still later this year. For loans closing in less than 15 days, probably want to carefully float and pay attention to the market. If you're closing further out than that, it's probably a good idea to just kind of ignore the market for the next 4 days and wait it out until we have some settling down of rates next week.